All right, what's going on, folks? Happy Monday, March 3rd, 2025. My name's Hamilton here with the Trading Initiative. And today we're going to be going through the strongest stocks in the U.S. market. Our heavy hitters report exclusively focuses on American stocks. We throw our volume filters on it, some of our technical filters on it, and then we filter it by proximity to 52-week highs. And what we're looking at here is a glimpse of what is leading within the United States. If you get the direction of these trades right, generally speaking, you're going to have a good time. Markets tend to follow these. These are the most important stocks. So as of right now, if you've been following last couple of weeks heavy hitters reports, you've noticed that a lot of the names on these reports have reflected sentiment very well. Sentiment in the market, as seen last week, and if you're on X at all, is in the dumpster right now. A majority of market participants on the retail side are bearish, and we see that come through in this heavy hitters report because most retail like to trade higher beta growth stocks, particularly tech stocks, and that's just not working in this market environment. The types of stocks that we've seen on this report week over week for the last 8 weeks have been lower volatility, more defensively positioned stocks. Right? Lower volatility or defensively positioned stocks, things like consumer staples, things like healthcare, things like energy to a certain extent, right? Lower volatility, but also a lot of financials. And I think that's where we're going to focus today. Today's heavy hitters report is all going to be about some of the best looking financial related names. Because listen, I understand totally. Tech sucks right now. We've talked about this a lot over the last couple of weeks that if tech is not going to participate in this uptrend, we do not want to own it. There's just no reason to open up new exposure here. As of right now, with tech trading below its 200-day moving average, I don't think there's any reason why we want to buy this dip yet, particularly in the semiconductor industry group. There's just no compelling reason yet. When we look over at the heavy hitters report, how many tech names do you see on this list? Not very many, if any at all, right? There are certain names there are certain names that have been on this list that are tech that are bucking the trend. I want to give an admirable shout out to ADP here, pushing up into all-time highs. This is a trade that we put on a couple of weeks ago that's pushing up into all-time highs off that 310 area. But for the most part, tech is just not working. So we're going to do what any trend follower or discretionary technical trader should do, and that's find the strength and own it. So let's go down this list really quick, and I want to highlight a couple of these financial related names because financials are leading the market higher along with healthcare year to date. Why would we not want to own some of these, right? MasterCard breaking out into all-time highs. You can see the chicken scratch here. We've owned MasterCard for an extended period of time. We're actually talking about potentially owning it out of this consolidation fractal as well. Came up and tapped our second price target here at the 2.618 at 578 earlier today. I think there is an opportunity for MasterCard to continue to run, but we're going to have to wait for additional confirmation that it wants to get up and over that 578 area before we continue to add into it. As of right now, MasterCard, along with Visa, by the way, good plays that we've been able to put on. Visa as well up into all-time highs, a trade that we put on a long time ago, but we've been unable to get a new position in here. I believe somebody over Nadeem, if you're listening to this, shout out to you. You were up 700 or 800% in Visa 2 or 3 days ago. I can only imagine what you're up right now in Visa with this thing continuing to scream into all-time highs. So for whatever reason, MasterCard and Visa up into all-time highs. You want to complain about a weak consumer, everything else, totally fine. That has not materially impacted Visa and MasterCard, which is why we always default back to price. Price leads everything. Own the uptrends in strong markets. You're probably going to make a couple bucks. A name here that is just now breaking out that I like. This was on the list last week as well. CME Group breaking out, trying to stick an all-time high move here above 254. Next price target up's got to be closer to 310, right in between 300 and 310 up at the 1.618 fib extension. We're trading north of an upward sloping 200-day moving average within a bullish momentum regime, and we have 51 days until the next earnings report. So we're on the right-hand side of that earnings, right? Really like the CME Group trade from a risk to reward standpoint. I think that we could probably throw our stops right underneath this consolidation fractal low and really juice the risk to reward up on something like this. CME Group gives us exposure into a broker, right? So a slightly different look at financials up into all-time highs. It is a slightly slower mover at 1.6% ADR. So obviously you're going to have to set your expectation if you're going for that 300 to 310 price target that is probably just going to take a little bit more to get there. Do like CME, big blue skies, all-time highs. There's no reason not to own something like this if you're looking for an opportunity to add exposure. Also like Bank of New York Mellon. This is a trade we originally put on at 64.50. Obviously worked very well for us. Tapped our price target up here near 82 bucks, pulled back, rebroke. We liked it again. We added into BK, and now I think there's an opportunity once again with the market coming out of this consolidation phase, particularly with financials. There's an opportunity to potentially add more, and I did. I added more BK today, extending the price target out in between 100 and 110. As long as we're holding above 88.5, I like BK on a continued move to the upside. There's no reason to expect that this is going to come down. Upward sloping 200-day moving average gives us confidence that the primary trend is still very strong to the upside. We have a bullish momentum regime across the RSI. It says failed to hit oversold territory going all the way back to the middle of 2023. Listen, it's not up for me to decide why the market likes BK. There's going to be people out there that are a lot smarter than me that are going to eventually tell me why BK was the name to own in the financial space. All I care about is participating in this upturn and making a couple bucks off of it. You can see off the original breakout, we're up nearly 40%. I think there's room for a potential $100 price target, $110 price target within the next 6 to 8 months. BK, not a bad opportunity here. Once again, if you're looking to add financial exposure, this gives you a little bit different exposure through the industry group of something like a major bank instead of an investment broker, right? So I really like BK here. Let's talk really quick about Starbucks. We're going to switch themes here. We put a Starbucks trade on back at 110, and I really like this particular trade that we put on. If you're in this trade with us, congratulations. We've talked about this for the past 3 weeks now. Starbucks pressing up into multi-year highs. The reason why I really, really liked this particular trade, this Starbucks trade, is because so many people hated it. Now, I'm not necessarily a contrarian trader per se. I'm not going to sit here and buy all the downtrends or sell all the uptrends. It's not the way that I like to make money in the market. But what I do like is when everybody hates a chart that looks like it's ready to break out, and their reason is that they hate the product. You know, I don't know anybody in the entire world that hates Starbucks more than Americans, and yet it's an American brand. You go anywhere else in the world and there are lines out the ass for Starbucks. I was just in Europe, spent 3 months there. Every single Starbucks was slammed. I live in Brazil. If I want to go to Starbucks, I have to wait in a line. It's only Americans that are complaining about Starbucks and maybe Canadians. There's a little bit of rivalry there. But the market doesn't hate Starbucks. Up into multi-year highs. We're coming into a bullish momentum regime for the first time. We're trading north of a 200-day moving average. It's sloped up. And consumer discretionary has not had a good year so far. It's actually one of 2 sectors that are down on the year, the other one being tech, and yet Starbucks is showing relative strength. So if you're in Starbucks, congratulations. I love this trade. You're in a big relative strength winner here and now an absolute winner here into multi-year highs. Price target remains up near 135. So congrats on the Starbucks trade. AbbVie is another one that we grabbed a couple of days, about a week and a half ago actually at this point. All-time highs here. Healthcare has been a difficult trade. Don't let anybody tell you otherwise. Healthcare has been a difficult trade, but it is leading the market higher this year. And I think that as responsible traders and investors, grabbing a piece of healthcare, even if it's not going to manifest itself into this big 50 to 100% mover, probably not bad for your portfolio. So that's what we did. We filtered through all of the healthcare names, and AbbVie's been on our list here, the heavy hitters report, for the last couple of weeks. For whatever reason, once again, it's pressing up into all-time highs, and we took that as an opportunity to own it. I like this continued move up and over the 200 to 210 area with a price target north of 255 to 260, that 2.618 fib extension. We're severely overbought, which as momentum traders, which we are, that's very good. We want to see overbought conditions. We do not want to see oversold conditions if we're looking to go long. We're trading north of an upward sloping 200-day moving average, 53 days out from an earnings event. I think there's an opportunity here if you missed the AbbVie breakout over the last 2 weeks to still position yourself in something like this. It's a leading healthcare name, and once again, healthcare is a leading sector on the year. Why would you not be looking for exposure in healthcare? I don't know. I don't know what's going to happen in the next 6 to 12 months, but I do know that healthcare right now is holding on to a leadership role, and so I want to own it. Another one that kind of slipped away was Gilead here. I'm going to bring this into the weekly. Actually, let's turn off the watch list. Still need to turn it into a weekly. Let's go to a weekly chart here on Gilead. What a beautiful stage 1 into a stage 2. So we were talking about owning Gilead, and for one reason or the next, we just missed the breakout, waiting for some sort of pullback, and we even did get the pullback and still failed to get long. This was an absolutely incredible opportunity at 88. PT of 107. This is a weekly chart. Keep that in mind, but still an incredible move by Gilead. I have no idea why. Don't want to get into the politics, but AbbVie and Gilead are leading the market higher in the healthcare space. space. We're up into 52-week highs. And I do think there's probably going to be an opportunity here in Gilead up near the all-time high pivot. I'm assuming that the market is going to chill out a little bit up here, and potentially we're going to be able to buy the all-time high breakout once again on Gilead. So if you're not in any healthcare-related names, Abivi may be potentially actionable today or this week. Gilead, I think, needs a little bit more time to set up, but something you should probably throw on a watch list if you don't have any healthcare related exposure right now. Really, really nice looking chart here, Gilead. Let's go ahead and bring this back down to the daily and just keep going down the list here. Shout out SPG. Not something I necessarily want to own right here. I think it's a difficult trade, but still, real estate, for whatever reason, we're up into multi-month highs for those of you that aren't aware. We were just up 1% on the day in real estate. It was actually leading the market higher. While not everything in real estate looks great, we're back up and over those bear market highs set back in 2022. We're also north of an upward sloping 200-day moving average now. We are. So we're back up. XLRE is back on the menu here. And there's a couple of REITs out there that actually look pretty okay. SPG, one of them pressing up into all-time highs. Kind of the more difficult part as an options trader, though, is making sure that the chart lines up with the options trade, right? It's not the other way around as a technical trader. If you're trading options, if you want exposure to the underlying asset through the options chain, you have to make sure that there's a play that makes sense. And that means a relatively low implied volatility, unless you're playing theta. That means you want some open interest on that thing. You want some volume on that thing. You don't want to be the only asshole in the world trading that thing right now, unless you think that there's going to be some big revelation with SPG, which makes real estate kind of a more difficult trade. So you're really going to have to go out and do your homework, which is what we do inside of TTI. It's the fourth pillar of our Sunday night strat session, as we go and we actually dig through the options data to make sure that we can trade the goddamn thing. It might look great on a chart, but we need to make sure it looks good on the options chain as well. So I would implore that you guys go through your real estate sector, find the strength right now. Actually, I don't know if this is all-time highs. I shouldn't have said that, but 52-week highs for sure. Looks like, yeah, not all-time highs, but 52-week highs for sure. SPG here looks good. I would not be surprised as XLRE reclaims that upward sloping 200-day moving average and that pivotal 2022 high. We're probably going to continue to see more real estate pop up on these scans. So anything else I want to go through? I want to go through one more. There's a bunch of stocks that just missed this list, and I'm assuming that if I actually made the list right now, that the stocks would be slightly different because markets have pulled back slightly and then rebounded, and so different grouping of stocks might hit the lower threshold down here, the 52-week high. But one I really want to point out here is JP Morgan and like Goldman Sachs. And if you're of the idea that financials are going to continue to run, if the leadership groups within the market are going to continue to run, look at the leadership stocks within the leadership groups. And there's nothing more important in the US financial sector than JP Morgan. JP Morgan is the flagship stock to own in the space. And as of right now, it looks like it's holding not only its 50-day moving average, which is not illustrated yet, but the 200-day moving average sloped up, looks really nice here. But it did bounce off of this 255, 256 level, which for us was a price target. We like the gap up. We never filled the gap. We built out this island fractal, continued to come up. Market pulled back over the last 2 weeks. We held that very important level for us, and we're bouncing. As long as we're north of that 200-day moving average, it sloped up, and we're holding that 255 level. You can also throw your 50-day moving average on if you want to kind of have some confluence between the intermediate and long-term trend. I think JP Morgan is probably going to continue to go up over time along with the broader financial sector. I don't see a financial sector performing well without a JP Morgan performing well. So I went ahead and bought more JP Morgan today. Just for those of you that know, I've owned JP Morgan for, man, it feels like a year and a half now at this point. I got into JP Morgan super early and then added in at the 170 level, which was the all-time high breakout. And since then, JP Morgan has just absolutely carried us higher, right? So I think that's going to continue here. JP Morgan, Bank of New York Mellon, I think both of those offer actionable setups today. Contracts, if you're an options trader, by the way, are deeply discounted given the fact that the market's pulled back over the last 2 weeks. I think New York, Bank of New York, you're getting something like a 50%, JP Morgan, you're getting like a 50% discount. Bank of New York Mellon on the contracts that we were looking at opening up, going for relatively cheap compared to some of the other names or some of the other contracts around the same kind of strike price that we're looking at in expiration, et cetera. If you're looking for financial exposure, though, these are not bad areas. These stocks own a large portion of the yearly performance so far, and I think that they're probably going to continue. One thing that isn't on the list is Mag 7. One thing that isn't on the list is an abundance of technology or consumer discretionary names. That's not the type of market to own at least yet. And I, wish it was just like everybody else, but it's just not the type of market to go and own more Nvidia right now. You don't want to go out and just buy these dips unless there's a compelling reason to buy the dips. And there's nothing from a technical standpoint that I can see that wants us to continue to pump capital into those areas. For all intents and purposes, a lot of those areas are broken. Now, I'm not of the opinion that they're done. I don't think that these trends are completely dead. I don't think we're rolling into a bear market in semiconductors. I don't think Nvidia is going to lead to the downside yet. But I absolutely know for sure that they're broken, and that there's no point in focusing on the broken areas of the market when there's still so much good coming into the market. I don't want to go into international heavy hitters. We're going to do that on Wednesday, I believe. But if you look at the European financials right now, also those are screaming higher. So it's not just US domestic, it's international as well. We're getting a lot of confluence between the financial sectors, both domestically and internationally. And guess what? You can own them. You can own uptrends in bull markets. I guarantee you it's a pretty good way to make some money. Okay, so wrapping this up. Hope you guys enjoyed it. Bank of New York Mellon, I love it. Opened it today, more of it. JP Morgan, I love it. Opened up more of it today. AbbVie we already have, but there's an actionable setup there. And as you can see, you can go down the list here. Lots of good looking names here outside of the growth areas of the market. Okay, guys. Hope you guys enjoy the rest of your Monday. My name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. If you're interested in our services, links are in the description. You can learn more about us. And if you would like, take the plunge. I think it'll be fun. All right. Catch you guys tomorrow for our growth leaders report. We'll see if it's any better than last week, given the fact that the market is slightly up here.